What's up, everybody? This is Greg with Evangel One Brokers, and this is the ADV1 podcast. This is a podcast we come to you each and every weekday with relevant topics and training. Today, we have a very special guest. We have the Senior Sales Manager with Assurity, Mr. David Everly. David, how you doing, brother?
I'm doing great. Thank you.
You're very welcome. You're very welcome. So this is one of our carrier product trainings, and Assurity has been gracious enough to come on and speak to you, all the agents, about their product line and some of the unique products that they have. So, David, what I'm going to do is just turn it over to you. Tell a little bit about the company and the products, and I'll let you take the reins.
Sounds good. Thank you so much, Greg. I really appreciate
You're welcome.
that you want to bring us on, and we look forward to working with you, Chris Curry, and the rest of the team. I think we're going to have a long and wonderful relationship. I want to get into a little bit about Surety. So I'm going to share my screen, and hopefully you all can see that without too much of an issue, and I'm sure you do. Just to give you a little bit about Assurity, we've been around actually for 131 years. Some of you may already know us and been working with us before, maybe you haven't, but we've been around for 131 years, started selling disability income to clients back in 1890 in Lincoln, Nebraska. We are a mutual company, meaning, as you guys know, that we are owned by our policyholders. We're AM Best, A minus, excellent, a very strong financial company out in Lincoln, Nebraska. We're a one-stop shop, meaning we have both health insurance as well as life insurance. And today we're going to really kind of stay on a little bit on the life insurance side, although I will show you a health product I think is going to be really strong in your portfolio as well. And then we're going to talk a little bit about simplified as well as fully medically underwritten. The other thing about Assurity, we got very simplified or non-med limits to work with. We allow you to do both e-app or paper app to process your business. And so we're fully automated in that area. One other thing I'll bring out, we're a B certified corporation, meaning that we are very socially conscious when it comes to the environment and people. We make decisions not just for the company's sake, but for people's sake and for the environment's sake. And if you know about B certified corporations, you know that to earn that certification, you need to be conscious in that area. But just a little bit about that. I want to get into our portfolio, and I'm going to talk about our term portfolio. And I'll tell you right off the bat, I'm going to cover term. I'm going to cover a term alternative or for those uninsurable clients. And I'm going to talk about our whole life. And I'm going to show you some great sales ideas around that. And going back to our term, it's interesting that term can be a very commoditized sale, right? Meaning that just give me the cheapest premiums, fastest process, and then I can get this business done. But Assurity's term is a little bit unique because you can actually use this as an advisory sale. And I'm going to walk you through how that works. You can actually put an entire family on a term chassis, on a term policy, right? And give them the things they need the most. Now, you think about a young couple, they have two young kids. What is the need? The need is to have as much coverage on both spouses as possible for their dollar. And as you well know out there in the market, people who buy term policies, on average, less than 2% of these folks ever actually use a term policy. What happens to a term policy is they either lapse the policy, or they take it to the end of the term and then they don't need the insurance any longer, or they convert the policy at some point, right?
Yeah.
But most people don't die with a term policy. But what is more likely to happen to any individual is the chance of getting cancer, stroke, or heart attack, right? The American Cancer Society brings out that 40% of men and women have a chance of being diagnosed with some sort of cancer in their lifetime, particularly in their younger years. The issue is, now the good news is that the dreaded C word used to be a death sentence. It's not anymore. We catch it early, we can treat it, but wouldn't you like to have some money in your pocket if that happened to you, stroke, heart attack, or cancer, to deal with while you're battling this dreaded disease?
Mhm.
Well, we can answer that, but we can also answer the question, do I take care of me or do I take care of my family? So let's get into it. First off, pretty common in the market is we have on our term chassis, we have 10, 15, 20, and 30-year term. Now we do go down to one of the industry low 25,000 of coverage. And we see a bit of cases for those older clients. Maybe they're 55, 60, 65 years of age, and they have a loan. They bought a car. They want to have 10-year coverage for that. And these are not insignificant premiums. They could be pretty decent, especially at those older ages. But we can go down to that 25, that 30, 35,000 of coverage for those clients. Now, here's our sweet spot. Between ages 18 to 50, you can buy 25,000 to 500,000 of term without on a non-med basis, no blood, no urine. You could do an e-app or you could do a paper app, either one. And if you do an e-app, you have the capability of getting an instant decision, right? So you get to the end, you take client's information, you hit submit, it thinks for a minute, comes back approved as applied for. And that's the e-app. Even if you do a paper app and you submit it to us, once we receive it, we run it through the e-app process. We can get the instant decision for you and then notify you. About 70% of the cases that go through our e-app are getting a decision. Sometimes that decision is no, but they're getting a decision and it speeds the whole process up. The client's not waiting for months to find out whether they're going to be insured. And even at the older ages 51 through 65, we can write 25,000 to 350. Now, here's the other thing I didn't tell you is if you use the e-app process or use accelerated, if they qualify, even though we're not getting blood or urine, if they qualify, we can still give them preferred plus. Right, so they're not going to be cheated on the offer if they don't give up blood or urine. They can still get their preferred plus up to preferred plus offer if they do so. Now we have all the underwriting classes as normal, smoker, non-smoker. We are considered an age last or current age birthday. So if the client's 364 days of age and they're let's say 35. We're not going to put them at 36. They'll still be 35 as long as the application comes on that day. And we're annual renewable to age 95. Now, moving on, here's the 3 living benefits. Bit important. I've been in the industry for, I hate to tell you, 40 years. I started for Bank of America back in 1981, way before most of you may have been born. But I've seen the industry evolve. And life insurance used to just be pay a death benefit, maybe develop cash value for you. But now we're asking life insurance to do much more, to provide living benefits. And of course, return premium, which is a much rarer product in our market. Not too many carriers have ROP any longer. We do. We have 20 and 30 year. And that 30 year is really competitive. Even before other carriers started getting out of the market, we were usually ranking number 1. We get a ton of ROP business in the door. So if you're talking to your clients and just asking that next level question, if none of this happens to you, would you like to get your money back? And putting that ROP could not only increase the premiums for you, but let me tell you, your client's going to be the happiest person for that day if they get a check back from Assurity for $15,000, $16,000, $17,000 because they didn't pass away. And then they can use that money for other things if they want to. So we got the ROP. I'm going to skip that critical illness and come back to it in just a second. And we got the monthly disability income rider, which will pay $3,000 up to $3,000 for 2 years if a client is totally disabled. So that's a nice feature. We don't talk about disability income options as much as we should either, but that's there. But let me go back to that critical illness. Living benefits, accelerated benefit riders have been an important aspect of insurance for the last 20 years, right? We've been talking about it and they are great, but there is a catch 22 when it comes to accelerated benefit riders. And that is, if I do get sick, let's say I have a $500,000 life insurance policy with accelerated benefit rider and I get sick, right? It's a terminal illness. Do I accelerate that benefit rider and utilize that money for myself, maybe to pay for medical bills, to buy medicine, trips to the doctor, whatever I may need, knowing that family may be left with nothing, or maybe just a burial amount, maybe $10,000 to bury me at the end. And I've worked with agents, clients myself, because I've been an agent for 25 years. And I work with clients who would decide not to accelerate that benefit. They said, you know what, if I'm going to die, I'm going to leave that for my family. I'll figure out some other way to deal with my illness. All right.
Mhm.
Some of you on this very call today might make that same decision. I'd rather take care of my family than myself. Well, that's a choice that with Assurity you don't have to make, right? Because the way our critical illness works is this. We have three categories: cancer category, stroke, heart attack category, kidney failure category. And you can collect up to, the benefits are $20,000 to $100,000. The client will select how much they want depending on what their budget is, right? Because it's a separate pool of money from the death benefit.
Mm-hmm.
But I'm going to walk you through how that works. And Greg, I think you're an agent. If you're not, I'm going to make you an agent.
I am an
right
agent.
All right. So, okay, this makes it really good. So Greg's a great agent, right? And so Greg comes to me and says, David, you know what? You're a young guy. Okay, I can dream. I'm going to be a young guy again. I got a young wife and two young kids. And he says, you need to have some coverage, some portable coverage that's not tied to your job. And if something happens to you, your family will be okay. I said, you know what, Greg, you're a good man. I want that insurance. So Greg sells me a $500,000 life insurance, term life insurance policy for 30 years. But Greg also makes that next step. He says, David, also, you know what you need? You need some critical illness on this, because more than likely, especially with your family history, there's a much higher chance of you getting contracting cancer, having a stroke or a heart attack during this, and surviving, than passing away with the term policy. And you want to have some money in your pocket if that happens, to deal with that illness. So I trust Greg. So Greg, you're right. I'll take $50,000 of coverage. Remember, I can do 20,000 to 100,000. Greg gives me 50,000 of coverage. I am ready to go. 2 years into my policy, I called Greg up. I said, Greg, I'm in the hospital. I just got diagnosed with prostate cancer. And Greg says to me, don't worry about it, David. That's why we put that $50,000 of coverage on that policy for you. Mm-hmm. So that in case this day happens, you'll have money in your pocket. So on diagnosis, Assurity will cut a check for me for $50,000 on a tax-free basis, because it's a health distribution. And I can use that money to pay my out-of-pocket costs for my health insurance, to buy medicine, trips back and forth to the doctor, to pay my rent or my mortgage, to buy food, right? I can use it for whatever I want or whatever I need. I'm going to be good to go. Now, thank goodness they caught it early, so I'm going to be fine. Now, it's 5 years down the line, right? It's got to be at least 12 months in between events. It's 5 years down the line. I called Greg up again. Greg, I'm back in the hospital. I had a stroke. And Greg says, don't worry, David, that's covered in that policy as well. So I get my second check for $50,000 to use to pay my out-of-pocket costs for my health insurance, to buy medicine, trips back and forth to the hospital. The same routine as when I had the cancer. Mm-hmm. But again, I'm going to be okay, right? I beat the cancer. I beat the stroke. Now it's 10 years down the line in my 30-year policy, and I call Greg up again. And I say, Greg says to me, are you still alive? And I say, yeah, I'm still kicking, Greg. But guess what? I just found out I got kidney failure. And Greg says to me, David, you're probably the most unlucky person I have sold a policy to, but guess what? That's covered as well. So I'm going to get my third check for $50,000 from Assurity. Remember, we started with $500,000 of coverage on my death benefit and $50,000 of coverage for critical illnesses. And there's 3 separate categories I can go into to get $50,000. And I just hit the third. But let's say that third thing, the kidney failure, is what takes me out, right? How much does my family get?
$500,000.
They get $500,000. Now I've utilized $150,000 on myself. but my family's going to get every dime that I initially purchased, right? Separate pools of money. And that way, I don't have to worry about or feel guilty about handling my own sickness. But here, let me go to a second step further. We can put the entire family on this policy. Let me walk you through that. This is an example I ran for the team, and we got a 35-year-old male here who was buying a 20-year term policy. And you'll notice down at the bottom, now first I'll take a look at the cost, right? $117.35 per month. He is a preferred plus. And by the way, he didn't do blood or urine. We did this all on an e-app, all of it. It took a half hour and we were done, got him insured. So he's got $300,000 of coverage. It's going to cost him $117.34 a month. But look at what we give him. It's 20-year term. And we put his kids on there. He has 2 children. Doesn't matter whether he has 1 or 20. It's the same cost. And by the way, you can sell it from $5,000 of coverage to $25,000 of coverage. And that child can stay on that policy with their parents till they're 26. And they can, if they want to convert, the parents want to convert them to their own permanent policy, they can go 5 times the coverage. So in this case, we got $20,000 on his 2 kids. They can both convert to a $100,000 policy. And how many parents want to keep their kids insured? So that's additional sales for you, right? So, and I've written a few of those child and parent-owned policies for their kids myself. So we got them covered. We got the kids covered. Let's move on. This is what that critical illness I talked about looks like. In this case, we gave the client $40,000. You'll notice category 3 is the cancer category. And you'll see the difference. You'll see 40,000 and 10,000. Let's assume the client came in with a melanoma, skin cancer. That is not metastasized, it's not a stage 2 or 3. They can, on that diagnosis, they can get $10,000 from us. We'll send them a check for $10,000 because of the non-invasive cancer. But if that non-invasive cancer metastasizes, or if they get another cancer, they can come back and get the rest of their money, which is, remember, the max you can get is $40,000. So they can get
the
how
remaining
much?
30.
30. Thank you, Greg. You get the remaining 30,000 for that coverage. Category 2 is kidney failure, that, like I talked about, organ transplant. And then category 1 is heart attack, stroke. So we got the big 3 covered: cancer, stroke, heart attack. So he's covered there. But notice at the bottom, we got the wife. We use what's called the other insured. We put the wife in for $300,000. Now we can put her in for less. We can't put her in for any more. And it doesn't matter. You can make the wife the primary and the husband the other insured. It doesn't change the cost because they're both underwritten individually, right? But in this case, we're just going, because he's the oldest, we'll put him in as the primary, the wife in as the other insured. She's preferred $300,000 of coverage. But you notice we gave her critical illness as well. So she's got the same $40,000 of coverage as he has in case anything happens to her. And then I asked the last question that we always should ask, and that is, what if none of this happens to you? Would you want your money back, or at least a big chunk of it? So we gave them the ROP. And you'll notice they hold on to it for 20 years. And if nothing happened, they live that charmed life, we're going to cut them a check for almost $13,000 coming back to them. Now, the first thing you might think is, David, that doesn't sound right. And that is because what they do get back
is based on the wife's premium.
Oh, with the husband, because the primary, and the ROP, but they don't get the riders back. Remember, it's a separate pool.
Yeah, that's what I was figuring. Usually, riders like that, especially since it's a different pot of money, it's not included in that ROP because it's a separate. That way, if it does pay out, he can still get his money back if he does not pass away within 20 years.
Absolutely.
I'm poking up what you're putting down.
Sounds like a plan. Hey, but I do get the question sometimes, what happens if, they both want the ROP? We'll split the policies. You can put the kids on the wife's policy or on the husband, doesn't matter. But in that case, they both will get their money back, or a big chunk of it back with the ROP. But if they like the concept that most clients like of having everything in one policy, one place,
Mhm.
That's where that full family coverage comes into play.
So that premium, that $117 premium, that was $350,000 of life on the husband, $300,000 on the wife, $20,000 on all the kids, cancer or the critical illness on both the husband and the wife, and an ROP on the husband's life portion, all rolled into one.
Correct.
$117 a month.
Yes.
That's
And
fantastic.
that's great. That's great where it becomes no longer a commoditized sale. It becomes an advisory sale.
Mhm.
Mr. and Mrs. Jones, you cover everything that you're going to have in the next 20 years, including your kids.
Yeah.
The other thing about that is the more likely that policy is going to stay on the books, because people don't like dropping policies they have their kids on,
Mhm.
right? That cover cancer and things like that. So persistencies on these type of policies tend to stay a little bit better than the individual sales.
Yeah.
But that's
Oh,
the
yeah,
full family
definitely.
coverage. And what I want to do now, Greg, is I'm going to take you into and the team into an alternative. Have you ever had an uninsurable client? We all have, right? If
Oh,
you've been
yeah,
in this
definitely.
for a
Many,
minute,
many times.
or you have those clients that don't tell you quite everything, right? I had a nice big case one time that I was working through, and then the client forgot to tell me she had cancer at one point. And that kind of knocked it off the train track. But what happens when you get clients who are uninsurable? I'm going to take you into a great fallback product. And I'll tell you a quick story if I can. When I first started with Assurity, I went to a meeting in Las Vegas and did a presentation in front of a group. And after the end of the presentation, the agent pulled me to the side. He started telling me, he said, I got a client, because I walked him through this Acci-Flex product. And he said, I got a client that I tried to get insured and I just couldn't do it. She had all these issues. She had a stroke and she had cancer and she was overweight and all these issues. Everywhere he sent his client, she was decline. He knew about our Acci-Flex product, but he said, what, I made a decision. I said, what, she's going to die of one of these issues. She just had multiple issues. 3 months later, she died in a car accident. And I share that with you because he learned a lesson. Don't make the decision for the client. If you can sell them something, sell it.
Yeah.
Because we don't know how it's going to be used in the future, right? And this client could have had $350,000 of coverage of benefits that went to her family. Had that agent just said, no, here's a fallback product for you. So let me walk you through this. Our Acci-Flex product is really simple, very easy to submit same day. You can do both e-app or paper app. You can sell it from 18 to 60, 50,000 to 350,000 of coverage, and it has ROP in most states and accident only disability income. You can, and that really works with truckers. If you work with truckers, I have an agent in Florida who sells a ton of this to truckers.
Yeah.
350 coverage. That $1,800 for 2 years if you have an accident, you can't work type of thing. So in one medical question, by the way, general information, one medical question, do you have HIV? And even if you answer yes, we can still get this product offered to the client. Who are some great candidates? Like I said, truckers, high risk occupations, police officers, firemen. I'm here in California, like a lot of you may be. And we have an annual fire, and unfortunately, we lose firefighters in those fires. Well, we could give them some additional coverage. Like I said, truckers, folks that decline for health purposes, those uninsurable, high-risk hobbies like motorcycles, ATVs, boating. As long as you're not doing anything crazy, wrestling alligators or anything like that, you're going to be all right and covered. And how about young people, right? Young people, you're more than likely young people are going to die. Is the percentage of young people that die from the diseases and things like that is small. It's higher than it should be, but it's small. And but they're more likely to die of an accident.
Yeah.
So here's some great coverage for them at a cheap price. And here's my selling point to you. Let's take a look at it. In this case, we've got a 45-year-old female, and it is 350,000 of coverage is the maximum coverage with ROP, and it's here in California. And so she's going to be covered if something happens to her. She slips in her bathtub, like my friend, I have a friend that in the county, in the Orange County, that was putting up Christmas lights on his two-story house and fell off, hit the cement. Thank goodness he survived, but he was in the hospital for 7 days. But he could have killed himself.
Yeah.
But had he died and had with a policy, we'd have paid. You're cleaning your gun, you accidentally goes off and shoot yourself, it's going to pay. And by the way, it's a 60-day period from whenever this accident happens to your point. So we hold the policy open that if you die within that 60 days, it's covered, right? So that would cover any accidental situation where you pass away, you're working in your backyard, you slip and fall, hit your head. There could be a number of issues that happen that leads to your death. You're in an Uber and it crashes. You're crossing the street in Vegas and you get hit. I mean, all these things that can happen to you, but you would be covered. You'd be covered by this coverage. But the selling point is look at the cost.
Oh yeah, it's super cheap. $33 a month for 30 years, 350,000 in an ROP built in.
Yeah.
Yeah.
You could sell this all day.
Yeah.
Go back to your clients. I got some additional coverage for you that has a savings feature to it. Right. Mm-hmm. So, and because of the ease of submission and these are 99.9% approvals on these, you can actually sit there and run these all day. And I'm going to show you a neat way to quote all of this when we get to the end of it. And so everyone will be ready. So that's our Acci-Flex product. Again, a great product to fall back, keep in your back pocket if you need it for those uninsurable clients, those high-risk occupations, someone who wants additional coverage that will give them their money back if they don't use it.
Yeah, definitely. No, I like it.
The last product I want to talk to you today is on our whole life. Now, we have a minimum of $10,000 that goes down, and we're not in the final expense market. We got rid of our product, unfortunately, and we may get back into it someday. But right now, we have a whole life product that you can actually do limited pay of 10, 20, age 65, and a life pay. And we can do it again, e-app or paper app, and it's on that accelerated underwriting platform, so you can get an instant decision, right? Mm-hmm. Now, let me take a look and tell you what our limits are. So you can sell it on a child. And I did a presentation just this last week where I talked about college funding, and that maybe I'll come back and Ray brings me back, and I can kind of walk you through that. It's a neat little concept about giving children money for college. So you can issue it on a child 15 days of age. Right now, we're stopping it at 69 due to COVID. Normally it goes out to age 85, but hopefully we'll get beyond that and get back to our normal issue ages pretty soon. But let me point to our accelerated underwriting limits. You'll see the 18 to 45 can go up to 200,000, 46 to 60 can go up to 150,000. But here's a kicker right there. 61 to 69, you can go up to 100,000 of coverage.
That's a big deal to get accelerated express issue underwriting. That age range for $100,000. Like, there's a lot of people that want to get that range at that age. They were like, "Oh, I want to get 100,000 of whole life or permanent coverage." And I mean, I can't tell you how many times I've run into it. But any other carrier that I've ever worked with, they have underwriting after the age of 60. It's automatically just going to be blood and urine every single time.
That's right. And you can get an instant decision on this one.
Yeah, that's awesome. That's awesome. I think that's actually more powerful, I think, than the term solution, which the term solutions you guys have is awesome. But 100,000 of whole life that you can get instant issue or instant decision same day. Man, 61 to 69, that's amazing.
and once COVID drops and we feel comfortable enough, it's going to go out to age 85. But it's even stronger than that, Greg, and I'll tell you why. And like I said, I've been selling for a long time. I got a call from my my brother-in-law who's ex-military, 67 years of age, great health, 5'8", 175 pounds. Mm-hmm. So, he runs every day and all of that. So he wanted to buy a final expense policy. He said, "David, I got $100 a month I'm going to put in. That's it." Right? Ex-military guy. So he had talked to another carrier, and they quoted him for his $100 a month and his rating. They quoted him $13,800 of death benefit for his final expense. And he came to me and said, David, what can you get me? And I ran him through Assurity's product, and I got him $18,500. And the reason why, it's a true standard offer.
Mhm.
It's not a blended rate, right? Like a lot of final expense products are. So if they can qualify for the standard, that's what we will give them. And it will be at that standard rate. Now, above age 60, 61 through 69, if they want like preferred rate, they would have to go to blood and urine. We'd have to do a full exam. But if they're good at standard, we can issue that right away.
That's amazing.
And again,
That's awesome.
they're going to get more death benefit or cheaper premiums for the same death benefit.
Mhm.
So that's a pretty powerful story. And thank you, Greg, for kind of reiterating that for me. So this is the handsome guy that presented to you today. And most people tell me I look like Denzel Washington, especially after
I bet you know what, funny story, not to stop you, but I used to tell people, like, when I'm setting my appointments, I would say, hey, I look like I play for the Dallas Cowboys. Don't ask me for an autograph because it doesn't do you any good. I don't actually do that. So, but you easily set up appointments like, hey guys, you'll see a handsome man come up. I look like Denzel Washington. At least my wife tells me that every day. You open the door.
Yeah, especially
after
we drink.
Yeah. But it makes clients want to sit down with you. They're like, man, this guy looks like Denzel Washington. And it kind of makes them laugh.
That's right.
So
that's right.
No, I like that.
And I will tell you one, most of you all know this. The clients buy from you, right? They buy from you.
Yeah.
And always have that, I like, telling a joke, having that smile on your face. It does so much to help you win over your client.
Absolutely.
And so last thing I want to do, Greg, is I'm going to stop sharing and I'm going to come back in here in just a moment here. So I'm going to show you all, and I'll send this to Greg and to Chris. He can send it out to the agents, and you can use it as you see fit.
Okay.
So I'm going to go back in. I'm going to show you this. It's going to be a two-step because of the way Zoom works. But what I'm showing you right now is a link that we have. It's not password protected. It's this one right here, myquote@assurity.com. And you can put that on your iPad, on your phone, in your browser, on your computer, however you want it. So I'm going to stop sharing here for just a second. And I'm going to go in and bear with me there, Greg.
Oh, no, it's fine.
So now I'm going to go back in and I'm going to show you what it looks like once once you click on that link. Now you'll see it takes you to this quoting site.
Mm-hmm.
Which quote you like to run, and it has the products we talked about: our term, our Acci-Flex. It has DI, which Greg brings me back. I'll talk to you guys about that later, and about our standalone critical illness, which is a product we sell quite a bit of. But let's go into that term. So you just click on the term. So you got a client who calls you, says, I need some term coverage. Let's say it's the state of California. Hit next. And then what's the age? I'll say 35. And do they use tobacco? No. Male, I'll say it's a female client this time around. What's her height? She's 5'3". So that's my wife's height. And 125. And her health is excellent. Now we could do a needs analysis, and I would suggest you go in here and just kind of play around with it. But it's basically, what are your bills, what's your mortgage, and things like that to determine how much coverage you need. But for right now, I'm going to say no. And then how much coverage do we want? So my client wants to buy $500,000 of coverage. Hit next. And then it gives you your quote at 10, 15, 20, and 30 years. Now, let's say this client says, you know what, I'd like that 30-year coverage. It's only $36. I'm going to click on it. And once I click on it, I have all the riders.
Oh, wow.
So I can add
Let's add the
ROP.
return premium, see how much it changes it by. There's only $23 a month to add to. That's actually not bad.
And
So,
I could actually add critical illness here too. Now that's a little bit more, but that
yeah.
gives me 30,000 of coverage for, and if I got kids, I can add them on. And so I got the full cost, but I'll take off both the critical illness and the children just for the ROP. And Greg, here's the strength of this. Once the client says, you know what, I like that price, just hit next, put the client's name in. My email address, the email address for the client, the phone number, and then my agent email, and hit send. They have a quote, I have the quote. And if they want to move forward, all I got to do is just start taking the app.
Oh, wow. I like that.
And I can sit on my iPad all day and sell.
Yeah. So,
And so,
go ahead.
no, I'm sorry.
I was gonna say, I know this is because we're in the process of getting contracted, a lot of agents, a lot.
Yes.
And so
I'm right in the middle of that.
Yeah. So you said the agents have the ability to do paper apps. If an agent's like, hey, I've got a situation for a paper app, and they want to be able to, if they are waiting on their writing number, can they do a paper app and just put pending in order to kind of push the process along?
Absolutely. Actually, Greg, they can do both a paper app or a e-app. And let me walk you through that, right?
Okay.
So we are just in time for most states. Only Pennsylvania it does not allow for just in time. So, and that means as long as your agent contract and your client application have at least the same date, or the client application is dated after your agent contract, you are good to go, even though you don't have your writing number. So if you do want to do a paper app, you can complete the paper app, and what you're going to do after your agent information is put for your agent writing number, pending.
Yeah.
So you're just going to write in there pending and then send it in. We will match it up with your agent contract once it gets in. Okay. Now, if you have access to iPipeline already, and you can get your administrator to turn on the Assurity products, you can actually take a Assurity e-app as well. And so when you get to the end of the e-app, what you're going to put in there is PEND, or pinned. They won't let you put anything additional in there. But again, it's the same concept. You're pending your agent contract. So once it's submitted, we can still do the underwriting on that case, and it'll only be pending agent contract. And again, we match that up, get that all settled in the back end, and you're good to go. Now, if you don't have access to iPipeline already, then you have to wait for your agent ID, and then you can go on Assurity's website and get registered on our website, and then have access to our e-app process there. Yeah. But we've got to make it as easy for you to start getting business. But I would say starting with your agent contract, which, like you just stated, you guys are already in the process, and I've been working with several folks, including Becky Hare, to get that all straightened out. And I think we're well on the way to that, Greg.
Well, this is a fantastic product to add to their suite of different carriers for mortgage protection. Even for, like, if you're looking for final expense, you're doing the whole life product. It's the same concept. It's just another tool you have in your tool bag. And especially, like, I'm out of all the products, I'm actually more excited for the whole life. I just think that whole life, that getting those amounts of coverage instant issue, that's insane. So, David, if you put up your contact information, if agents have any questions, can they reach out to you for email or by calling?
Absolutely. Let me give it to you. It's pretty simple. It's D Everly at Assurity. So DEVERLY at Assurity.com. That's my email. And then my phone number is 402-437-3624. That's 402-437-3624. And you can reach out to me. I'm in California, so I'm on the Pacific Standard Time Zone. But feel free to reach out to me if you need have questions, you need illustrations, any help like that. I'd be happy to jump in. And especially with COVID, I'm at home now 99% of the time. I do get out once in a while.
Yeah.
Like I was up to visit in Sacramento last couple weeks ago, and I met Chris and the team. And were you there too, Greg?
Probably not. I've been back and forth a few times, but I haven't been there for every single person that's come in or visited. So you'd remember me. I'm a massive dude. I'm like 6'7" and 250.
Oh, okay.
I'm like a walking tree.
That's why you said you look there. You look.
I look like if I NFL because I'm a really big dude. So
yeah, you make. I work with Brad. I worked with Brandon Johnson, who was 6'5". He's an offensive lineman for Iowa State. You make him look small.
So David, I thank you so much for coming on board and taking the time just to pour into the agents. I know that they're going to absolutely love this. And for all the agents watching this, if you're watching this on YouTube, make sure that you subscribe to the channel, like the video. And if you got anything out of this, if you enjoyed the training, if you learned anything, if you laughed, anything, if you got anything out of the training, hey, the fee is that you share it with somebody else that can also get something out of it.